Welcome back, everyone. Sean Stevens here again with Metroplex Mortgage Services and another USDA Loan Pro video quick tip. Qualifying for a USDA loan if you are self-employed can be both confusing and frustrating. But in today's video, I will review a 3-step approach to help relieve anxiety and further explain the process. However, before we get started, don't forget to take advantage of our free tax return review service. This is a great way to have your self-employment income reviewed at the preliminary stages, and just yet another free resource we offer to help keep your financing headed in the right direction. First off, know what self-employment documentation will be required. Per USDA guidelines, an applicant or household member is considered self-employed when they have a 25% or greater ownership interest in a business. Further, when ownership is 25% or greater, the following will be required. Federal income tax returns filed and signed for the most recent 2 consecutive years with all schedules along with any applicable W-2 forms, and federal income tax returns for the business filed and signed for the most recent 2 consecutive years with all schedules, if required for the ownership interest or business type, and a recent profit and loss statement which is not required to be audited, and confirmation that the business is operational, which must be obtained within 30 days of loan closing. What income is reviewed when calculating USDA self-employment income? As the USDA approved lender, we will be analyzing the most recent 2-year history of the business earnings. Additional review will be required for any sharp increases or declines in self-employment income, which are defined as 20% or greater variance for income earnings from the previous 12 months. Now, remember that while this is the general rule, different types of business structures will also require separate analysis, such as those for sole proprietors, S corporations, partnerships, etc. And then number 3 in our approach, can business debts be excluded from your USDA debt ratios? Per USDA, business debts, for example a car loan, reported on the applicant's personal credit report may be excluded from the monthly debt if there is evidence the debt is paid through a business account. Acceptable evidence includes canceled checks or bank statements from a business account for the previous 12 months. As you can see, this guideline has the effect of increasing your loan amount and what you qualify for, since we do not have to count certain business paid debts against your USDA debt ratios. In summary, if you are self-employed and trying to qualify for a USDA loan, do not let the paperwork overwhelm you, because that is what we are here for. Just call or email to discuss your scenario and let us show you the Metroplex difference. As always, I want everyone to make it a great day and look forward to seeing you right here for the next tip of the week.